NIO stock has just had a big pump today and is back to $11 again. What's up guys and welcome back to the channel. NIO stock had dropped earlier this week after the earnings report, and in this video I will explain why this happened and why NIO is beginning to bounce back strong. I'm going to keep the intro nice and short, but just to let you know, in today's video I will be looking at the latest delivery figures, the latest earnings report, and I will look at what is by far the biggest risk to not only NIO stock but to the entire NIO company. If you are interested in NIO stock, then you will need to know this. Anyways, keeping the intro short, if you like the content, then smash the thumbs up. I'm not even going to ask you to subscribe to the channel because if you've seen my videos before and you're looking for real data about stocks, then you're probably already subscribed. Now let's get into it with the latest delivery data announcement and why this month's delivery data is so important. Today NIO announced that NIO continued to see strong deliveries in August, although down slightly from July. The company delivered 19,329 vehicles in August, up 81% year over year, but down 5.54% from July according to the data it released today. Although the deliveries was down from July's record of 20,462 vehicles, it was still the second highest in the company's history. And this is despite a brief production halt at the beginning of the month, where NIO's F1 plant stopped production for 5 days from July 29th to August 2nd for a production line upgrade, according to a report by local media outlet Peizer. Now this is something that I have talked about briefly in the past few weeks. After NIO had seriously ramped up production during July, I was very disappointed with the first couple of weeks' delivery data in August. But this brief production halt at its F1 plant could be one of the main reasons for this. NIO was seeing at least 300 ES6s roll off the production line every day, and some of its workshops have switched from single shift to 2-shift production. NIO plans to release and start delivering the EC6, a newly upgraded mid-size coupe SUV, in September, completing the full product switchover based on the NT2 platform, the company said in August 29th analyst call after announcing its second quarter earnings results, which I will look at in just a moment. The company guided for third quarter deliveries of 55,000 to 57,000 units in its earnings report, implying year-over-year growth of about 74 to 80.3%. 12 analysts have set 12-month price targets for NIO stock in the last 3 months. The average price target is $13.39, which represents about 20% upside from the current price of $11. Looking at market beat, we can see that NIO stock is currently in the lower half of its 50-day range and 52-week range, and the market cap is now $19 billion, which ranks NIO as the 5th largest EV brand in the world by market capitalization. Now the craziest one on this list here is number 2. VinFast Auto is currently the second most valuable electric vehicle company in the world by market cap, which is incredible for a company that is miles behind everybody else on this list. Now VinFast recently went public in a SPAC merger, and to be honest, the current valuation of $64 billion is ridiculous. The stock is now down to $27 after reaching a high of over $80 a few days ago, but I expect this will drop approximately 50% or even more before year end. And with Tesla being number 1, and for some reason BYD is not on the list, but BYD would be number 2 by market cap, and they would be number 1 in terms of sales and deliveries, having recently overtaken Tesla. And they are trading at a fraction of Tesla's valuation despite having close to 70% of their revenue. But NIO has had new price targets set in the past few days. And we can see that several analysts have lowered their price targets for NIO, but then after today's delivery announcements, NIO stock is up nearly 10% again. So NIO did release its latest earnings report earlier this week, and the stock instantly plummeted nearly 10% to its lowest point since July, but then rallied up again quickly. So let's take a look at this earnings report. As always, I like to look at the company's balance sheet first, and then I'll move on to the statement of operations. So first of all, NIO has a strong balance sheet with total assets of over $12 billion and total liabilities of just $9.5 billion. And a very strong point here is that NIO has a strong cash position of over $4 billion between cash, restricted cash and short-term investments. So overall this is good, but it's the income statement that makes for the best reading here. Now the biggest takeaway from NIO's second quarter's earnings report was not that the company saw declining revenues, which we can clearly see here with the revenue being down not only on the previous quarter but also on the same quarter the previous year. So not only was it declining revenues, but the big takeaway is that the Chinese EV sector as a whole is seeing a broad pressure on vehicle margins due to increased price competition, which has the potential to push out break-even years not only for just NIO but for other EV manufacturers too. Now revenue growth is decelerating mainly due to slower than expected delivery growth, and this coupled with the price competition is causing increased losses. And it's not just NIO. Tesla's price decreases of popular models such as the Model Y, which is the best-selling electric vehicle in China, has forced other companies in the sector to also lower their prices. Among them obviously was NIO, which cut its prices by about $4,000, and the decline in prices has led to a massive decline in vehicle margins in the second quarter. Like when we look here, we can see that revenue is down from both the previous quarter and the same quarter the previous year, and this has completely eroded the gross profit and led to one of the biggest quarterly losses for some time. But one of the biggest concerns from NIO right now is their margins. Looking at the second page of this earnings report, which there's a link to in the description below, so for anyone who hasn't seen this, it is definitely worth reading. NIO's management's future guidance and what they're expecting to see over the coming months, and to get a general feel of how the Chinese EV market is doing at the moment, as well as the broader Chinese economic climate. So NIO's vehicle margins increased slightly quarter over quarter. The vehicle margin from Q1 was terrible at 5.1%, and this has increased now to 6.2%, but this is still down a massive 10% from the 16.7% recorded in the second quarter of the previous year. Now this is a huge concern. This is far bigger than the concern of any lawsuit. This is the concern about if NIO can make it to a point where they can break even. Like as a result of the steep cut in vehicle margins, NIO reported a massively expanding net loss for the quarter. Like let's scroll down here, we can see this very clearly in the revenue, $835 million in the second quarter. Like comparing this with a loss of 2.8 billion yen or $400 million in Q2 2022. So therefore losses have more than doubled due to lower selling prices as well as weaker deliveries. And NIO's first break-even year is years away. NIO is expecting to achieve its first break-even year in full year 2026. We're talking about an entire 3 years away. So between the deteriorating margin trend, which is a key concern that needs to be sorted out quickly if NIO plans to make it to 2026, and NIO has been ramping up deliveries, so Q3 will be much better with expectations of between 55 and 57,000 vehicles. So what do you think? Surely the Q3 earnings report will be better. It has to be based on the delivery data that we've already got. Do you think that NIO stock will continue on the upward trend until then, or do you think that the stock will drop down again next week? Like when it comes to valuations, at NIO's current price, they look like an attractive buy. NIO currently trades at a price to sales ratio of about 1.4x, which is a massive discount to the 1-year average price to sales ratio. And the recent drop from $14 down to $11 looks to have taken some risk out of NIO. But surely the biggest question is, with losses of over $800 million in one quarter, will NIO make it to 2026 to break even, or will NIO fall flat long before that? Drop a comment down below. Guys, if you're new to the channel, hit the thumbs up and subscribe. I plan to do a more detailed NIO analysis in the coming days. If you enjoyed this, check out some of my other videos and I'll catch you in the next update.